Hey guys, how's it going? Welcome to the weekly market breakdown for euro dollar for the week commencing, I believe it's Monday the 26th of September 2022. So, yeah, last week was a pretty crazy week in the markets. Obviously, a ton of volatility across the board, loads of high impact news announcements. I think last week, even potentially, just over the last sort of 10 trading days or so, the window, I think there's like 14 or 15 major central bank rate announcements. So there's a lot of policy changes going on. Obviously, a lot of macroeconomic events that, has caused the dollar to be on absolute tear. So let's, the easiest thing to do, right, is zoom out a little bit and see potentially where we may be on the bigger picture. Now, on the forex.com data feed, which is the data feed I use up here, the data doesn't go that far back because obviously we're trading at levels we have not traded for I don't know, maybe 20 or so years. So if we go to FXCM, they do actually have data that goes a lot further back, as we can see here on the quarterly chart. So, when you look at this, it's not really too surprising to see what's going on after we've had that impulsive breakdown out of these levels, right? You can see we've had that pullback, eventually then broke through this week low, right? Because it's obviously failed to break any of these highs. We're kind of in that continuation of that impulsive phase after the break of those sort of major monthly and quarterly levels. So at some point, potentially we could expect a bit of a pullback, but trying to pick that bottom can obviously be pretty tough. And there's no real need to do it, as we'll talk about in a bit when we start to look at the other time frames. They will start to shift in those bullish directions, right? And we don't need to try and second guess too much of when that reversal may occur. But zooming out, looking at the quarterly chart, I think there's a pretty obvious level, we can all see, around about the bottom of this previous leg here. Now, if we zoom out even more, there's a good argument to be made that actually this is the overall bigger trend, right? We can see these series of higher highs and higher lows, and potentially this was that last strong low that took out this high, right? And all of this is just one pullback into this low. And then who knows, maybe euro to the moon, right? Probably doubt that's going to happen, but I would say, who knows, right? I don't know. But in terms of longer term outlook, I'm not here to make 5 or 30 year predictions, but price coming into this level, potentially we may not really see any floor to this current, bearish pressure until we get to down around these sort of levels around below the 0.990 region. So, interesting times ahead. Obviously, we're not just going to get there in a straight line. Well, maybe we will, I don't know, but we'll probably see some pullbacks in between then. But I think until we sort of probably get down to around, this quarterly demand range down here, that's maybe when we finally start to see a bit more of a sustained pullback. Take a look at the monthly chart. We're still within that level that I've been speaking about a few times, right? Where we kind of have this monthly flip zone. It's not the best in the world, right? It didn't really flip anything majorly clear other than this sort of wick. And it's kind of, a bit of a pause in the middle of this larger leg. But we are still within here, so who knows, right? Until we clear through it, there is still some potential we could see a bit more of a bounce coming from within here. But the major one will be coming into this large low down here, where we may sort of come even more refined levels down to around the 88 region. That remains to be seen. But it is worth sort of zooming out when we get in these environments where we don't sort of have any recent price action, especially on the lower time frames, to kind of base too much on where that bullish pressure may step in. Potentially maybe get a pullback up to this inside bar. Who knows? So let's hop back to the trusty forex.com data feed and let's take a look at the old weekly chart. So again, as you guys know, I don't spend a ton of time really trying to dig too much into these charts. We know we broke those major levels. We know potentially we could expect a deeper pullback at some point. That's not happening. So maybe those quarterly zones are where that may be occurring. And this is where we can just keep it simple. And we just follow structure until it shifts, right? It's just the basics, right? That we try and, as best we can, stick to. And that's what I was saying last week. Not the most major of zones in the world, right? It barely caused a break below. It's not the biggest of weekly pullbacks, but the path of least resistance, when you look at recent price action, it's always going to be that price is just going to continue until it doesn't. If price had broken up through supply, closed above here, okay, now maybe that's the type of first signal we may be getting a deeper pullback, even if it was just to this level, right? But until that happens, just keep following order flow, right? There's no point, in trying to fight it or assume otherwise. So again, predictions for the week ahead or forecasts, I should say, will just be the same thing, right? Just continue to follow structure. Potentially over the next few weeks, we may get pulled back into here and continue down. And that's it. Not really much else to add there to the daily chart. Sorry, to the weekly chart. Now we are on the daily chart. You can see halfway through the week, we had that break of structure, giving us our new daily swing high here, right? Because that's the highest point that then went on to break that swing low. And then the last few days, we've just been selling off pretty aggressively. So this becomes our new, obviously, strong slash protected swing high. Now, we've had a daily break of structure, so we do have to start thinking in the back of our minds that at any point we can have that daily pullback. But, it's hard to tell. It's hard to know when that will or will not happen. So that's why we just follow our structure rules, right? Ideally, we want to see kind of at least that sort of bullish daily change of character to signal that pullback. But the lower time frames are gonna signal that to us. Before we need to start trying to guess when that's going to occur. The only real kind of clear daily supply zone would be this level where we flipped this level of demand here. Okay, so this demand came into the market to break these highs. Pricing came back into it, reacted, obviously failed to put in a higher high, mitigated this supply level here, and then pushed to the downside. So that's a nice, decent sweep zone. No real clear inducement, but I think the odds of us putting back up to here this week are probably low, but who knows, right? But that really kind of be the only daily level I'm looking at. Obviously aware of this sort of big daily doji as well. When you get sort of big dojis like that, typically, especially when price is like a lot of momentum, like a lot of imbalance like this, you'll typically see price may pull back up to this and then go from there. So that definitely would be something I would be aware of. And then the 4-hour chart. So let's zoom in a little bit. We know that... just remind you on the daily chart, right? When we initially had this break of structure back here and towards the end of August, right? And then we kind of had a little bit of an internal pullback, and then we had that break there to have that daily pullback to the premium level of supply. Just zoom in a little bit. Okay, that break of these highs was essentially the 4-hour switching bullish. So why did the 4-hour switch bullish? It most likely switches bullish when the daily is bearish, right? The 4-hour switch is bullish simply to facilitate the pullback to a premium level of supply. I can't get my words out today. So when price comes into a high probability POI like that, where it increases the probability that the daily pullback is now over, when we're on the 4-hour chart and the 4-hour looks bullish, we have to be very wary of the fact that the daily chart is more powerful, the daily swing structure is more powerful, and that's where it can overpower the 4-hour bullish trend and come out to take that low. Now, did we know for 100% certainty that would happen? Of course not, right? At that moment, price could have easily come back into here, formed a 4-hour high low, and we could have just had a deeper swing pull back into here and then gone. But that's why you always have to go, what is the most probable scenario? And in that instance, or in every instance, the daily chart is always going to be more powerful than the 4-hour chart. So we can't be too surprised. So going back to the 4-hour chart, this is the price action that I was talking about where the 4-hour chart switched bullish, but it was just to facilitate the daily swing pullback of this leg. So as we come into that level, and the nature in which we then sold off with the internal structure shifting bearish, I don't think it's too surprising, especially if we started to correct from this demand, right? There's no real follow through. That price was then ready to come down and take out these weak lows. And since it's done that, we initially got a bit of an aggressive retrace, came into this most recent level of supply, and it just sold off super aggressively. So kind of just talk you through that as well. We had this extreme level of demand. Price comes into it, reacts, clearly fails to put in a higher high, and then we get that break of structure to the downside. So that becomes our demand to supply flip. But as price broke down, you can see it came back in and mitigated that inside bar and then pushed down. So if you follow the mitigations, these buy to sell wicks becomes the next unmitigated zone, which is why price came into here and then moved down. Okay, so you can see that again. The inside bar was created when we broke and closed below there. That was your demand to supply flip. And then in the next candle, we pull back into it, right? And then we push down, and then we pull back into there, and then we go, okay? I personally don't view this pullback here as sort of significant enough to be deemed as a 4-hour swing pullback relative to recent price action, right? Kind of looking at these larger swings. That to me is swing structure. This for me is just an internal structure like this. However, if you are a bit more aggressive and you want to map your structure a little bit more tightly, that's absolutely fine too. But like you would have needed to have viewed that as your 4-hour swing structure, okay? And that'll be it, right? You can follow more aggressive mappings. You just have to accept that sometimes the trend is going to change a lot more frequently for you when price action gets a little bit more choppy. So for instance, if you had to map that as a swing pullback, right? And then that was the 4-hour swing trend switching bearish for you. Well, you would have also had that as another bearish boss because price did just about close below that. And then that obviously would have been your bullish boss there. So then the 4-hour would have been bullish for you. And then it would have switched bearish again, right? So that's just the nature of what happens if you map your structure a little bit more aggressively. It's not right or wrong. It just means when price action gets a bit like that, the trend can just change a little bit more frequently for you. Okay, so yeah, in this instance, that for me is just an internal pullback. It's nothing major. Okay, so yeah, I mean, to be honest, when you have expansive moves like this, when the market's just trending heavily, there's not really too much you can do with your weekly forecast. It's quite a quick job in a way, because structure's relatively simple, right? Everything's bearish. It's selling off pretty aggressively. So now it just becomes a case of, just identifying potential POIs where price may pull back to. So I'm not really going to spend too long kind of talking about POIs all the way up here, because, it's going to take a long time probably before price will get up here, right? I doubt it's going to come up to this week. I think we're much more likely to see potentially a bit of a pullback, a breakdown, and then, maybe we'll get a bit of a shock, maybe we won't. It can all get a little bit tricky, okay? And, until we start to get at least a bullish change of character, we can kind of get away with being reasonably aggressive and just following the bearish trend. Because I kind of show you back over here, when we had sort of, very, very aggressive or volatile scenario back in, I think it was July, was it? Yeah, July. Right, we initially got this breaker structure down here. We don't know, how quickly price is going to pull back, or is it going to fall? Let's see, another 400 pips or so, right? Because we had that movement and it just kept on tanking to the downside. Here we had the break, and then boom, we had a pullback straight away. Break, pullback straight away. Okay, so obviously, the simple things we look for is we look for bullish shifts in structure, whether that be just a change of character, like we had here, right? Price pullback. Why doesn't it keep working? Price pull back, then we got the bullish shock. Okay, cool. That was like a decent signal that we were getting that move, right? So on and so forth. Whereas here we didn't. We sold off aggressively for a long time, and then we know, right? So even when we get a bullish change of character, that it doesn't necessarily mean that we're going to be ready to go. I mean, I don't think there's even a bullish change of character anywhere here. We actually had a very, very subtle one here. Okay, if you see here. See, this inside bar failed to break the previous candle's low, which means we had that fractal pullback. Okay, so then we had a bullish shock here. Now, at that moment, we can start to go, okay, well, that's our first bullish shift in structure on the 4-hour chart. So potentially we're going to get that deeper pullback now. But as we know, changes of character are super, super aggressive. It's just a fractal structure break. And we just use changes of character as a signal that it's the start and end of internal pullbacks, right? Remember, we need an IBOS, so we need the internal structure to shift bullish to signal the start and end of those swing pullbacks, right? So the point I'm trying to make here is, coming into the week ahead, kind of until we start to at least get a bullish chock, probably you can get away with just continuing to follow that bearish order flow, even though we're expecting swing pullbacks to kick in. But if you do see a bullish chock, you don't just be going, okay, now the pullback's starting, now I'm going to get long and I'm going to try and target the swing pullback, because especially when price is very, very volatile, you can get stopped out a lot, right? Bullish chock, stopped out again. It's only when you get that significant IBOS, right, where you see kind of clear internal structure, so like a pullback like this, then we get the IBOS, okay, now there's a lot more significant, and now we have that deeper swing pullback, right? And that's why we use IBOSes to signal that. Now, that's not to say you can't get long after a 4-hour bullish chock, but it's just to manage your expectations that they're not the strongest, they're not that strong of a confirmation, okay? So likewise, let's say we get a bit of a pullback on Monday, then we come down, and then on Tuesday we get a chock. Okay, I'll be happy to potentially start looking for longs, but I'll be very wary. It might just be an internal pullback to then continue down. Then if you got that, and then we broke up above that, right? If it was just an internal pullback, something like this, where it wasn't a big swing pullback, okay, now the internal structure is bullish, and now we can start playing those swing pullbacks with a lot more confidence, right? Because this is a strong internal low that took out the internal high, and it becomes a lot higher probability to follow that. So yeah, it's kind of tricky when you have a break of structure, a swing break of structure. We obviously know those swing pullbacks can kick in, but we never quite know if we're just going to keep dumping and dumping, especially in the higher time frames. So that's where, personally, I'll be following the path of least resistance and looking for those shorts, but I'll be still quite aggressive with my management, because it's hard to tell how long price is going to keep falling for, and technically we are still within monthly demand, okay? But hopefully I kind of made my point clear there. So in terms of 4-hour supply zones, kind of just follow from where we were towards the end of the week, right? We obviously have this inside bar. I typically like to include the wick as well. So we've got that level there, which would be your current 4-hour strong internal high, as that broke that low. So that would be a very decent level if we pull back up that high. It doesn't feel like it at the moment with the momentum, but who knows? And then that inside bar was mitigated, so I'll probably refine that to those buy to sell wicks here. But as you guys know, I'm not a fan of buy to sell wick zones, especially when they're quite small. But they can play out, they can give you reactions. The nearest one I could see was this one here, right? There can be decent moves because essentially those buy to sell wicks on the 4-hour chart is usually like an M15 zone or sometimes a 1-hour zone, right? There's obviously no inducement, there's no structural liquidity in the leg, and it didn't sweep any liquidity here, so it's not the best zone in the world, but it is within this prior internal supply range. So yeah, it's definitely something I'll keep an eye out on, but this would be a much higher probable POI in my opinion, and it has some nice inducement with these equal highs there above. Now we do have this bullish candle, right? Buy to sell candle, whatever you want to call it, which for me, it's a 4-hour POI. Obviously it's not great in terms of it hasn't broken any structure, right? Because all of these candles broke the prior candle's lows, so it's all part of the down move. But sort of specifically when you get very, very impulsive price action like this, and we know that price action isn't likely to pull back that deep. Obviously it could do, but maybe it won't. Maybe the momentum will continue in the market open next week. Typically when you get those big large dojis, or particularly the bullish one, like the daily has a big doji here, right? These sort of big candles, when momentum's strong, sometimes price can just pull back into them and continue down, right? Because that large daily doji candle, I believe, would be this price action. So likewise here, the point I'm trying to make is this on paper is not what we would define to be a strong zone. It hasn't broken any structure, right? There was no structural pullback. But I'd be happy to basically view that as a 4-hour POI when we may get a quick move, okay? So that's it. There's not really too much else I can add to the 4-hour chart here, to be honest with you. We'll just have to see how structure develops, and I'll be pretty quick with any targets, and obviously using the M15 as my main sort of intraday intra-session guide. So M15, we had that last break of structure to the downside. We obviously pulled back on Thursday, failed to break out that low, and then we had the pullback on Friday. So yes, technically this high can be viewed as weak, but this is where it's not super simple in the markets, right? And the reason why I say it could be viewed as weak, right, is because we come down, we fail to break out the low, and then we start to have bullish changes of character and even internal breaks, whatever way you want to map it, and we come up. So potentially this high may run until you either see at least a bearish change of character. But this is a perfect example of where, yes, that's a framework we can use, but ultimately, when momentum's strong, you can see that's a pretty strong high, right, in terms of the way it formed, the way it swept liquidity, a ton of momentum coming in. It's not ideal. I was expecting that high to break, to be honest with you. I know I took a loss from within here. It's a bit of a tricky price action, and sometimes market environment's a bit tricky, right? Weak structure can play out, strong structure can fail. That's just the markets, right? You have to be able to be comfortable with the uncertainty that is there, and it's tricky. But yeah, you just have to do your best to navigate it. Keep your risk management tight. Try and keep the numbers balancing in your favor as much as possible, right? With having reasonable amount of risk to reward, and you will come out on top if you can zoom out on a big enough picture and focus more on sort of your quarterly results rather than getting too lost in your even week to week, even session to session results that I know it can be quite hard to do when we're in the midst of it day in day out. But anyway. M15, for me, that's all one break of structure. Again, you can absolutely fine to view that as a swing pullback, right? It's just try and be consistent with the size of the pullback you're viewing for. For me, if we zoom out and look at the recent price action, that to me just more of an internal pullback. So I'm viewing the current swing high where it is. Now, again, I've kind of did a little mini lesson on this, I believe, on the 4-hour chart. Which I'll get to in a second, just mapping this, whereby if you do map your structure a little bit tighter, right, and let's say you call that as a swing pullback, maybe you don't with this, and that's your swing high, that's absolutely fine, right? And I'll be viewing this as a pretty significant high, right, because it's quite a decent pullback, especially considering the momentum we've got. I'm not really anticipating prices are going to come up here. I think the most probable scenario is we're going to get something like this, and then we're going to break down, okay? That's the most probable scenario, but I'm still going to keep my swing high up here. Now, if we did break this, and you map this as your swing high, you don't want to go, okay, M15 is bullish, that's really, really significant. Now we're going to get a big swing pullback on the higher time frames. What I would be thinking personally, if you did map that, is just, okay, we'll probably just switch bullish just to facilitate the pullback, right, of this larger leg. Maybe you want to view that as your 1-hour structure. That's all I'd be thinking. So then you wouldn't be surprised, if we came into here and then we switched bearish quite quickly, even though we just switched bullish. You wouldn't be surprised because you understand, how to zoom out and look at the bigger ranges. And that's why I always try and say it doesn't matter too much where you map your swing structure, as long as you're consistent and you just have expectations managed correctly, that if we break here, it's probably just to facilitate the pullback of this larger leg, so then you're not surprised we switch bearish, okay, so on and so forth. So kind of you can map on these internal structure breaks on the old M15, and then I would view that as an internal break as well. Okay, so that brings us to where we are. We haven't even had a bullish chock yet. The most recent fractal high would be this inside bar here, okay? So again, am I going to view too much into an M15 change of character? Absolutely not. Not with these current market conditions, right? If we saw something like this, nice big equal lows, and then we got something like that, okay, but even then that would be an internal breaker structure for me. So I at least kind of want to see that internal structure shift bullish. Like imagine this was London Open, kind of really want to see that go. But even then I'd be like, well, it could just be to come into this leg here. It's kind of one push down. So sells are going to be the main thing I'm going to be focusing on, but reasonably quick with my targets. And yeah, I want to see a lot more structure developed to be kind of seriously considering longs. You kind of want to see supply really failing. You want to see demand starting to hold. You want to see that bullish order flow starting to kick in, right? There's no need to rush into anything with here. I know like the last few months have been pretty quiet for me. It's not been the easiest, especially with August, quite slow conditions, and then September's just been super volatile. But it is what it is, right? This is the market environments where if you can keep your head calm and cool, you don't get FOMO, you don't get frustrated. You have to wait for the market conditions in which everything lines up quite nicely and you can see those high probable trades, right? You don't have to chase price action. You want to be looking at a few trades a week, not a few trades every single day when market conditions are potentially not ideal to the way you view the markets, okay? So yeah, I don't know. I think some of these 4 hour zones should be showing and they're not. So I'm just going to quickly do this. Cool. And then we'll just do that one there and then go back to the old M15. Cool. So chart OC, I'm just going to rein this in a little bit, and then we'll kind of look at the most relevant POIs for the M15. So like I was saying, right, ideal scenario would always be we wait for price to pull back up to premium supply, then we look for our nice entries, then we target the low. I don't think that's that likely to happen, so I'll be pretty keen in these, not keen, but open in these sort of market environments to be a little bit more aggressive than I usually would in terms of selling at a discount. Now, I'm not going to get too caught up in the immediate M15 price action because obviously a lot between when the market opens through the Asian session before we get to the London session, a lot can change. And I'm not really too keen on being super, super aggressive here. Like I'd probably be looking at more here and seeing how we form. But obviously I'll update the charts as we come into London on Monday, but it's going to start to sort of draw out these POIs. We can see this one's already mitigated. Potentially price could break up through this POI here, right, and mitigate something within the wicks, and that's fine. Then you can reassess, right? If you like what you see, then you can obviously hit it. But for now, I just prefer, and I would advise you guys to kind of just stick to drawing your POIs on those single candle clear pivots, right? The ones that are mitigated, rather than kind of trying to force it and go, there's a wick here and drawing it on and things like that. For me, that's mitigated. I would leave that there and I'll just be focusing on this. Like these are done. But obviously, when you get kind of those messy zones, if price does come in and it starts to aggressively shift, then okay, it makes sense. We can understand that there's probably like an M5 supply zone from within there, right? Cool. This zone up here is really nice. Swept liquidity. Obviously has some inducement here as well with these highs there. And then we've got these levels here. Cool. And then, it's kind of reasonably simple when we have, like I was saying earlier, right, when we have price action selling off so aggressively. And I've got this level here as well. It's kind of just a case of drawing on the clear POIs, looking to see if price pulls back to them. But then it's obviously how has price pulled back, right? Because if we start to get up to these levels and price is kind of showing quite bullish structure, then we can short from within here, and it is pro swing trend. But potentially it may only be a move to come into the strong internal low, right, to push higher. Because it's only once we get that internal structure shifting bearish that we then have the internal structure realigning with the swing structure. That will then signal the end of the swing pullback, right, when we get those bearish eye bosses, and then we can look for those continued movements, right? So it's always just remembering those frameworks and applying it to there, okay? And there's not really too much else I can see. Obviously, there's candles like this, right? They're all a little bit random, but they're there. So it's just keep it simple. Look for your unmitigated single candle M15 pivot POIs. As it's pro trend, for the most part, I'll be pretty happy to hit those on the M1. But it will depend on how price reaches down in M15. Like I said, like how is the internal structure, how much momentum and things like that. And obviously you may want to map on your premium at discount as well, but I think it's probably unlikely we're going to reach these levels. I think we'll probably hit off something in here and continue to the downside, okay? I don't think there's really too much else I can add. I don't want to kind of ramble unnecessarily for the sake of it and drag this video out. Hope you guys have a good weekend. I hope you guys have a good week ahead, and I'll see you in the next one. Cheers, guys.